we have positive correlation because the stock market, or let's say the economy, it's not suffering like now. If things are bad, if inflation is higher, so we want lower rates, we want lower prices. But if maybe things start to go like aggressively lower, it's like, no, we don't really like it like that. And that's what we see at the moment. Now, gold is just doing its thing. The stock market is just doing its thing. Dollar index is also just going anyway. So mostly we have this disconnect, but it's because everyone it's hoping for the economy to recover, or let's say we don't really want the economy to collapse, because if the economy collapse, obviously we won't have the stocks or indices. So those indices, or let's say Nasdaq US 30s, they exist just because we have the economy. That ecosystem has to just actually interconnect nicely. If the other one is going lower, it will affect the other one. So actually we need balance. That's why last week NFP, the way it went lower, it's good. Actually it's good for the stock market, but the way it went lower, it was crazy. That we saw that we see that no, this is not going to be good longer. So that's why we start to have that panic. So we need, actually at the moment, we just need balanced figures from these economic events, and from there I think maybe that will be good going further, because we don't really want to see a recession, even though we can actually avoid it along the way, but we don't really want to see it happen like now, you see.
Sure. Yeah, very, very good points there, Kenzo. And Kenzo, for listeners, comes on every Friday. We do a segment called Fundamental Fridays, where we just go back and forth talking about, all the economic data and talking through it. So if you guys have enjoyed this commentary from Kenzo, I want to just encourage you guys to make sure to go subscribe to Extra Hot Forex. He's got his own channel there where he's putting out free content to help traders. So if you are looking to learn, highly recommend take a second to go subscribe to Kenzo. And a big thank you to you, Kenzo, for coming on the show here today and helping us out.
Thank you very much, man, and your viewers.
All right. Have a nice weekend, Kenzo. Thanks for coming on. Guys, we're going to keep moving along here. We're going to be bringing on Chris Pulver to take over the show here for a little bit. Stay tuned on that. But before we do that, I just want to mention, guys, we've been going through a lot of economic data, talking a lot of stuff here today. If you guys want to try out the Edge Finder, we're going to drop a link here to a trial form that you can fill out if you want to apply for a 30-day trial of the Edge Finder. You can get access to all of our tools and data. We're going to drop that link here in the chat. I really do recommend that if you are somebody out here trading these wild markets right now, get yourself some tools, start using something like the Edge Finder, or at least, find tools that can help you in this market, because a lot of people are just trading, purely off of emotions or gut feelings. And I'm telling you, especially when volatility is like this, people are losing a lot of money, making, mistakes that could be avoided if you have a system, a plan, and the right tools to help you spot ideas in the market. So try out the Edge Finder. Again, 30-day application is in the chat right now. Real quick, we're going to take just a quick break to thank our sponsors, and then Chris Pulver's got the show from here. Stick around with him. He's going to be talking about some setups. We will also be dropping the link to his channel and socials as well, so that you can find him there. So stay tuned. We'll be right back with Chris taking over the show just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, happy Friday. Welcome back. Just taking a look at everything this morning. The week that was, certainly it would be memorable, should be memorable, will be for most of you out there that have been paying attention. And definitely some lessons to take away from this week on Because it happened. Look, I think one thing what's kind of wild and crazy about being a trader is this one thing happened, and if you never want it to happen again, you got to prepare for it. So I did incorporate some extra kind of audibles in some of my core strategies in order to, if we ever have a nasty 1-day vol event like that again, that it's a little bit easier to navigate. Um, Other than that, I mean, it was a pretty wild and crazy week. I'm just spot checking a lot of things. P&L's fine in the day. P&L's been fine this week. I've shared some charts on my Discord channel yesterday and in Telegram as well. Some of the key levels that I'm watching, it's pretty much the same between the S&P and the Nasdaq. We had a recovery since Monday's open, right? So we opened so far lower that we had that big flush Thursday, Friday, Monday. Markets pulled back, it's stabilizing, but I think the bears are just hanging out right here in this mid zone to possibly flush it lower. Okay, so SPX right here, SPY right here, and ES, same thing. So if we're looking to kind of fade those moves a little bit, or wouldn't be surprised if we get a fade of those moves. Zoom in on my chart. I know it's a little sloppier right here, but I could see this area having some resistance. So our support levels right in here, we had the close from Friday, and then we had a gap lower in here. So if the bulls are able to get into this zone, I do think the bears are going to step in and defend a little bit. I still go back to the simple chart right here on the SPY. The 200 EMA is right down here, just below the low from Monday's open. So if we see, and we spent a lot of time talking about it this week, we had our 1-day vol event. We've given it back the last several days from 65 back into the low 20s. Okay, so VIX is down. But if the VIX turns up at all, okay, if the Japanese yen gets stronger, if the Nikkei starts to sell a little bit, if we see a VIX event, again, not to the tune of 65, but I say if the VIX goes up to 30 or 35 or 40, that's probably going to spark another retest of these lows. And so I wouldn't be surprised. Next week we have some interesting data coming out. I don't have a ton on the earnings report. I looked at that this morning. This week's earnings, we had a lot. We had 1,100 plus companies this week. Consensus wise, we had pretty much all green on Thursday. It was funny to read the headline like one of the best days since 2022. It's like, okay, well, we just had one of the nastiest like 3-day spills in a while. So, one green day doesn't really make up for it. We're still ways off the highs. We have inflation data coming next week on Thursday and Friday. Okay, so next week here, Tuesday, we have our US PPI data coming out at 8:30. That'll be pre-market. So we'll see how Wall Street reacts to that. 10 p.m. cash rate from New Zealand that expects to be the same at 5.5. Wednesday morning, again, pre-market core CPI and year-over-year CPI forecasted. Interesting, forecasted at 3%. So we're forecasting a same, not sub. So again, this is another question. Inflation next week, if the forecast is at 3%, does the market need to see? Does the market need to see a less than 3% print in order for that to be taken in as good news? Because if it's less than 3%, that means that, okay, that confidence in the Fed cut coming in September is probably higher. But if we print at 3% and the previous was at 3%, we're right back in the same conversation as sticky inflation. I do think inflation, should be coming lower. Okay, let's go to Trueflation. Actually, Trueflation right now should be showing sub 2, I believe. Yeah, I mean it's continuing to press a little bit lower. So I don't know. I if I'm gonna guess, if I'm gonna flip a coin, coin flip being, are we below 3% for next week's CPI print or above it? I would say that we're gonna land on a probability of being lower than 3%. If this is any indication, we're pausing in here, but I would imagine that we are still trending a bit lower. This has been a pretty nice downtrend in inflation over the last couple of months, and I just wonder if the market gets excited about it, or if the market uses it as, okay, they're going to cut rates and whatever. So we'll save that drama for the weekend, and hopefully not see the market, kind of poop its pants over the weekend and next week. So stocks are a little bit mixed today after, congratulations. They fought back in a big way. But it didn't feel like it wasn't like the May fight where we all of a sudden, gapped up and we're just taking out highs again. This feels like, okay, the world isn't ending. And you talk about a shift in sentiment this week. I mean, does anybody know what everyone was screaming on Monday? Everyone on Monday was screaming, the Fed's got to do an emergency rate cut. Oh my gosh, we're down 9%, we're down 10%. Okay. And now they're like, okay, look at the Fed watch tool. The difference this week in the Fed watch tool was probably one of the other crazy things that I've seen in this tool. We spend way too much time watching, but the reality is this thing was up, to like 80 or 90%, here it was like 80, 90%. And then all of a sudden it shifted into, this is 25 basis points. This is 50 basis points. And we're back to like 50-50. So the market can't make up its mind, right? And it's trying to price this stuff in ahead of time. We're still, 30 days out or so from the Fed rate hike, or I'm sorry, rate cut. But the higher probability right now is leaning towards a 50 basis points cut. Something tells me that, here you go. Something tells me that if inflation prints at 3% next week, that this is going to go up, this is going to go down. And if we get a cut at all, we got to be satisfied with only that 25 basis points cut, which I think that's what the Fed wants anyway. Fed's been talking about starting to cut. I don't think they need to go into a 50 basis points and take a bigger bite. Although they were, getting all sorts of guff this week for misstep and miscalculation, and they're behind the curve right now, and maybe they are. But guess what? Regardless of what happens, we're gonna have to figure it out, and we're gonna have to trade through it. Okay. All right. So let me do this. I'm just going to walk through my top downs. So SPY's right here. I think there's some pretty solid resistance in this Friday gap, and definitely some resistance at this previous support around 537. I posted this in, let me see here, key resistance levels. Yeah, so around, this 532 to 537 level on the SPY. On the Qs, we came all the way back to that Friday gap. The Qs we could push up into, some wicks around 449. We could push into the body closes around 458. But to me, this is another zone. If we come back into this area here or this area here, or from this little island gap we have on Friday, this could fade a little bit going into next week on the Nasdaq. We could also see a broader market rotation out of Nasdaq into maybe the Dow, into small caps a little bit. Small caps could certainly benefit from a rate cut. Underperformance hopefully will be helped a little bit, but you got to wonder. I mean, earnings this week, I wish there was just a nice little consensus on like, where's earnings, good, bad, and different. Most of the companies that reported this week, were they positive, negative? What's the guidance? So I'll try to be digging for that information this weekend. Della says we already are in a recession phase if the Fed doesn't cut. Global economy will be more demolished. Yeah, I don't know. I thought about this a lot this week. There's a lot of time to sit and reflect on like, oh my gosh, okay, so I've been trading for 24 years. What have I seen that reflects this? What does this look like to me? And anyway, some of the takeaways were, if we had only the asset bubble from 2020, right? Let's draw this out for a second. When we saw 2020's crash, that turned into a V bottom that ran all the way up within about 4 to 5 months to all-time highs, and then blasted all the way through 2020 into 2021. And then we saw a little deleveraging happen in 2021, rolled into 2022 for a nice correction. Okay, we had a 5-wave correction in 2022. We finally picked up the bottom there, and we started to have a broad market rip, and then another broad market rip, and we're at all-time highs this year. Now, if we only had a V bottom from 2020, and 4 years later we're sitting here at these crazy all-time highs, and we never had a 2022, if we never had a 2022, I would be more in the camp of, we're going to get a bigger correction. This bubble's going to burst. Okay. But this deleveraging did happen. What was stupid is how this leveraging happened all over again, right? Because once we had this correction in 2022, what did this happen? Or how did this happen? Arbitrage with the yen, lots of risk on trading, dump everything into Mag 7, dump everything into AI, dump everything into Nvidia, high concentration, house of cards. That's why this is cracking now. And so if there's still a healthy market out there somewhere, we're going to see if there's 490 stocks that can somewhat perform adequately to kind of stabilize everything, as opposed to it's 10 stocks leading the way, it's the top 10 of every index leading the way. I just don't think that's sustainable, and we witnessed that. And of course, what happened with the Nikkei dumping the way that it did, that's another index that we should be watching closely. Look, at this point, after shedding about 27% in a matter of weeks, I'm still interested in watching the Nikkei. I found that stat that we had one of the biggest 2-day sell-offs ever. We'll check that in a second. We had one of the biggest 2-day sell-offs ever in the history of the Nikkei, and that makes me wonder, 12 months later, what does it show? 12 months later, every time we've had these large 2-day sell-offs, it's been higher, and to the tune of like 18%, 25%, 40 some percent. And so again, I don't think this is necessarily the bottom or a V bottom, but if we go from high to low, we pull back here. If we drift higher, I think this makes a correction. So I'm looking for some type of like little tiny rising wedge on the Nikkei, and we'll see if this drops and that all of a sudden sees a couple of days of strength in the Japanese yen. If we have a high to low, we're up here. If we go sideways or we pull back a little bit, then there could be more of a V bottom type move. Okay. So watching closely, I think that we clearly saw the correlation of the Nikkei was in trouble. It dragged down the U.S. markets. And so if the Nikkei starts to show more signs of volatility and bearishness or bullishness for that matter, it's pretty simple. This week, with the Nikkei coming back, it allowed the U.S. market to come back. If the Nikkei goes higher, probably good for the U.S. market. Nikkei goes lower, it's probably going to drag on the U.S. market. Just saying. So should it always be like that? No, it shouldn't. But it was a big deal with like the over leveraging, the carry trade, and how quickly that it unraveled for the last like 1,500 to 2,000 pips. Okay. So I do think that's a strong level to watch. I also think that the Bank of Japan is probably in there somewhere that will be having some type of monetary policy decision that will affect whether the Nikkei can go higher or lower. I wouldn't mind seeing this just from a pure price action standpoint. We have a 27% shed. I wouldn't mind seeing the Nikkei try to work its way back down, and a higher low would be a good sign, or try to work its way back down, test the lows for a double bottom, and all of a sudden that's the spot where it's like, look, I just bought the index at a 27% discount, and then if it wants to go higher, it's going to be 30% or better to get to the all-time highs. You talk about looking for yield, you talk about looking for gains, you talk about looking for upside. That's not bad if you believe we're going higher, but if we go from this low all the way back up to highs, we have to go 36% to the upside. How many of us are looking at the S&P right now thinking the S&P is going to go up another 30%? Not me. I'm not looking at the NASDAQ right now thinking this thing could go up 36%. Not me, So from that standpoint, I think it's interesting. Like, yeah, the Nikkei could really have a good run over the next, 12 months or so. Are we at all-time highs again? If we are, great. Well, there's an opportunity to trade an index, or ETFs related to it. So food for thought, right? DAX and FTSE are, I think FTSE is a little bit more stable right now. There's some pretty solid support in the FTSE. A lot of central banks are going to be cutting rates going into 2025. So we have the central bank curve, right? BOJ is coming out this way, and all of the central banks are coming down this way. So we're at 0.25% of the Bank of Japan. The Fed has not cut yet. So who has cut? Who's cut so far? Okay. So soon to cut would be probably the Fed and maybe the RBA and the RBNZ. Those would be the banks that are on tap to cut. Who has cut? Bank of England just cut last week. The ECB has cut already, and the BOC has cut already. Okay. Also, the Swiss National Bank has cut twice. So soon to cut, Fed, maybe the RBA, RBNZ. Who has cut? All the others. Okay. Who hasn't cut? The Bank of Japan. They've been raising rates. by raising rates, I mean they get out of negative territory. They go from literally negative 0.1 to 0.25, and it wreaks havoc in the market. So, it flaps its wings by 30, 35 basis points, and all of a sudden the market comes unraveled. So pretty crazy stuff, to say the least, because we're talking about, oh my gosh, the relief cut of 25 basis points. It really doesn't matter. It's not that big of a deal. I think it's more like the optics of the Fed finally starting to not raise rates, no longer stay in this pause cycle, and all the free mileage out of them talking through this and getting to this point, we're finally here. And I do believe that once they cut, they will be pretty consistent in continuing to cut. Could the Fed still navigate a soft landing? Maybe. We're going to see on the resiliency of the stock market. If we're going to have a soft landing, we've got to see stability in the markets. All right. So that's that. What else we have here? Mag 7 hanging in there. Nice recovery this week in the Mag 7. Some buy opportunities that we saw immediately on Monday. That was pretty much the market's reactions. We had these big gaps lower. Everything was bought up on Monday. A little mixed on Tuesday, Wednesday, but tried to tread a little bit higher. Thursday was a nice bull market day across the board. We do have some earnings. Next week, a little bit on the lighter side. I think there's only like 400 or 500 companies. This week, we had 1,100 plus companies, but the notables that I found, I didn't take a single earnings trade this week. So where'd it go? I thought it was in here somewhere. There it is. Earnings for this week. So anything that stands out, I saw that Under Armour had a pop to the upside, which was fine. Like RKT, I'm just looking at a couple stocks in my portfolio. RKT's back up into 1819 with a kind of a better outlook for real estate with rate cuts. I didn't see really anything else. Robinhood, I want to say was down. Disney was down slightly or mixed. Shopify was up. Airbnb I didn't look at. I mean, there was 1,100 companies, and I think there were more important matters at hand than trading a couple earnings. But SMCI I think got hit pretty hard to the downside this week. That's a semiconductor. Okay, we had a split on MicroStrategy, 10-for-1 split. I did end up taking advantage of that yesterday. I put in a ratio spread for a pretty decent credit. I mean, I got $7.50 on a ratio spread with the 85 by 80. So if I do get assigned, number one, it'd be at $80, which is way down here. I could tighten it up a little bit, but I'm not interested in owning MicroStrategy at $100, at least for like controlling shares. I want to own it a little bit cheaper. But I do like this trade. So let me see. I might put this on the books. Let me see if this trade is still as valuable as it was yesterday. MicroStrategy. My timeline on this one. Let me check the other instruments. So here, January 17th. Okay, so an 85 by 80 for January. So I go to January 2025. If I buy the 85 and I sell the 80, okay, so I can get about $7 and change on this one. Would I allocate, $72 to this? Yes, the premiums are pretty solid. I'm going to take this trade. Let me see if I get 730, 735 on this trade. Perfect. All right, so I just took that trade. It's a ratio spread on MicroStrategy, 85 by 80. If I take the assignment, I'm going to own the shares around 72.65, and I will work it down with 30 to 45 to 60-day covered calls. I'll wheel my way through it for some income. Tesla is going to be the same type of thing if I take assignment at $200. So let me add this into my trade tracker. So MSTR, that's a ratio spread. 117.25 expiration. 85 long put. 80 sell put. $7.35 credit. And willing to own. If assigned, break even will be 72.65. Boom. Okay. All right, let's take a look at currency strength right now. This morning is the opposite of what we saw all week, right? So the big move down was, look, all week last week it looked like this. Okay, last week was this all week and way higher on the volatility scale. This is here's a shot from my Discord group right in here. Move this over. So August 5th was Monday, right? And we came off of that crazy run. So Thursday last week, Friday last week, it was stronger yen, stronger Swiss, risk off trading. Monday coming into the open, Sunday night when the Forex market opened, Sunday night when the futures market opened, Japanese yen was ripping and cranking, Nikkei dumping, of course. So that was when Monday, hit the bottom and started to fade. The rest of the week was weaker yen, weaker Swiss. Okay, so this was Tuesday and Wednesday and Thursday. It was a weaker yen, weaker Swiss all week. Today, we're showing that potentially, okay, a little bit of risk off trading again is likely going to stall this recovery in the stock market. So I do think this stuff is pretty important to watch, because if you're taking a look at the Forex market and you see that the Japanese yen is your strongest currency pair, that's probably not a good thing for stocks. That means that the Nikkei is vulnerable to turning back down, which means that's likely going to drag on US stocks because you're going to get some global risk off sentiment. Okay. Oanda safe and trust. I mean, I think so. I've been with Oanda for like 9 years now. I've got some Forex money with Oanda and Forex money with TastyFX. But I've been with Oanda for a long time. So I mean, you have, look, in the US, you have 3 brokers. You have Forex.com, you have Oanda, and now you have TastyFX, which used to be IG. So you have 3 brokers. If you want regulated brokers in the US, those are the 3 you go with. Pretty simple. Okay. All right. So that's what's going on to currency land. I like the ratio spread on MicroStrategy. Taking a look at Bitcoin and gold, silver. I still like silver and gold quite a bit. If we get a pullback, I wouldn't be surprised. Here's gold. Yesterday was pretty good on gold. There's another spot that I'm willing to pick up gold. There's two levels I'm looking to buy. I bought gold down here at equal lows. Okay. I rode gold pretty hard on some call options early in the year, and I'm done with that. Now it's ownership. Now it's on to just owning GLD, owning gold, trading gold futures, which has helped me generate some income. So on that note, if I go to XAU, there's 2 levels I'm still watching for. If we do not get to higher highs and this resistance holds, I could see gold coming back down into the same support level, right? To me, this consolidation is an opportunity to buy. I would still buy it there. If I wanted a dollar cost average, now I could buy there and then stop out immediately, or I could buy there and say, look, I'm willing to allocate. And if it comes down again, I'm willing to allocate. Past resistance becoming support, we also would find some efficiencies back down around $2,100. Now, I don't think we're necessarily going to break below 2250. So that's why I'm looking at this. If we come into here, I'm looking at that as, okay, we're choppy. We can't quite break these all-time highs. We come back down, try to test this level one more time, maybe have a bear trap on the right side of the trend line, and then we come back up. If we do that, I'm going to take a stab and just add. I already have my main tranche right in here. I'll add another one and see if this gets to highs and then higher highs. So I do like that spot around 2280, 2271 as a buy opportunity for gold. The other one would be if we just keep testing and testing and testing these highs. If we break this high, a break and a pause, look for a flag, or a break and a retest, look for a breakout to continue. Okay, my spot price on gold as far as running a target would be 3K. If we get up to $3,000 spot price on gold, and I mean longer term, it could be bigger than that. But I do want to keep an eye on, like, okay, so how far does gold overstretch, and how far does maybe gold outperform silver if it runs? These things matter as far as, like, if we're looking at some overbought conditions with some divergence kicking in. But if we get a big crazy bubble in gold, that'd be awesome. In a way, that'd be awesome, because we could push really high, and we could have this potential wave of weakness in the dollar. We could see that benefit gold. We could see it benefit Bitcoin. We could see it benefit commodities in a big way. So I still say this: if you want other assets to perform well, and you want the stock market to stay pseudo resilient, you got to see the dollar get weaker. I still think the dollar has to get weaker. Okay. All right. How does the withdrawal work? I mean, what do you have available? I don't know. I've never had any problems taking out money. So for 25K, 50K accounts, 100K accounts, $500,000 accounts, I've never had any issues taking out money from Wanda. It might take a couple of days, but usually within 3 to 5 days, you get your wires or whatever. All right. Anton says increasingly expensive borrowing costs in the Japanese yen. Yeah, by 0.3%. So you go from basically getting free money out of Japan into now you got to pay 25. Which would you rather have? Would you rather borrow the yen at 25 basis points, or would you rather borrow in dollars at 5%? Would you rather finance on a 30-year house at 6.5%, 7%? I mean, what I'd love to do is go to, I mean, if possible, I'd love to go to Japan and look at real estate. Take out a loan and from a Bank of Japan that's got a yield around, oh, hey, you're going to finance this at 0.5%. Okay, sign me up. I don't know what real estate is. I know back in the 80s and 90s, it was atrocious. I think per square foot, you had like $200,000 a square foot, $200,000 a square foot. That's not an exaggeration. But is the Bank of Japan going to be on this crazy hike cycle? Probably not. For a decade they had negative 0.1. I think once they stabilize here, we'll probably see them at off of zero for the foreseeable future. But I don't see them continuing to raise rates. If they do, to where 0.5%, maybe 1%. I don't see them ever being a central bank that's going to have high yield. So probably low interest rates. But it was just a big enough shock to have it be off a negative, now to positive. They're raising while others are cutting, and there's your unwind. Okay. All right. So anyway, gold, 2 setups, right? I like this area to buy. And then if we break and retest there. But I'm not just going to buy the high. I want to see it break first. Break, pause for a flag, or break, retest, and then go. And you can trade both of those pretty tight and things run, and then get your stop loss into trail. All right. Silver. I still like silver a lot. And in the bigger picture, this is one of my allocations where I want to add to silver with a bit more confirmation. So right now I own SLV. I have silver futures that are still looking pretty good with the levels that I'm in. If I go GC, this is gold futures. So I have gold futures with credit spreads at 22.80, which is right below these lows. That's out to the end of this month. If I go to SI futures, that's silver futures, and I have it at 26.25, and we're trading at 27.60 right now. So again, one in August, one in September, trying to get some bounces on silver. I did look last night. Let me see if I can find a trade on silver. I don't think it really paid what I wanted, so I didn't take the trade. I did mostly credit spreads, but I looked at if I went out to the end of this year and I wanted to do something. I mean, I suppose I could just go out to the end of the year and say that silver is going to be solid, right? Let me get like a 22. I don't know. Let me see what 22 looks like on silver. If I can get anything for a credit spread. 22. So, I mean, that for that little 25-point spread, because this is a whole futures contract. So if I go 25 times 50, so my max loss is around $1,200. I'd taken the credit up front. My extrinsic is 85. So I'd make $85 to risk $1,000. No thanks. So what I looked at instead was if I were to go in, let me see here. So 22 would be, I think 22 is a pretty solid spot. 21.85. So let's go 21.75. So I get $640 on this. It would require about $3,300 in buying power. That's not a bad little income play, but it's not very well hedged. So one thing I'm going to do here is if I put on this trade, could I do this and I still collect credit? So this would be around about a 6 delta put for $3,300, $3,400 on this trade. Now, if I want to put in a hedge, let me put in like like a 1 delta hedge. This is a little bit more manageable, and I'm going to put in on the lower one, I'm going to put in 2 contracts. Okay, I think I'm going to take this trade. So this is, I'm going to do it's kind of a weird synthetic play in the futures market, but I'm going to put in a naked put at 21.75 that essentially is going to help me generate $430 of income. All right, and it's only going to require about $1,000 of buying power. So right there, I'm making about 43% on my actual investment. So my ROC is my return on capital. I'm getting 425 out of just over $1,000 of buying power. Now, I do have risk on the trade, but because I'm putting in a long put at a 1 delta, that serves as my hedge. So if we see a big drop in silver over the course of that same period, that long put will allow me to hopefully mitigate and wash some of this trade. Now, I don't think we're coming necessarily down there. I have a 90% plus chance of probability of profit, so I like those. So I'm gonna take this trade. This is gonna tie up about $1,000, but I like the return on capital. You know, $425 income is pretty solid. I'm taking this trade. So here, let's see if I can get filled at 85 cents. I'm going to try to get 0.090, and then I'll work down to 85 and 80. So I'll try here. Okay, so it's not filling at 90. Let me replace this. Let's go to, I'll try 85. Okay, not filling there. Let's go mid 84. Okay, slightly below the mid 83. All right, fill the 82 cents credit. I like this trade enough that I'm going to take this for other accounts as well. This is a pretty good income play. So I'm going to go here. Let me make sure I don't have any other similar expirations on silver. So SI, these are all out to December on the credit spreads. Okay, which one did I just take? So my SI here is December 26th. Okay, so that's going to be an overlap with those credit spreads. That's the 21.75, which I know I use that strike in the other accounts. So I need to be careful on that one. Yep. So I'm gonna fudge. All right, it's no big deal. I'm trying to think, can I modify this? So for this account, I've got a 2250. This one is a broken wing butterfly. All right, let me do this. I'm gonna do what other contract can I do on silver. I'm gonna go out to January and do the same trade. All right, I like this trade. I'm gonna do the same trade that I just did for the same account, but I'm gonna switch it up. Okay, so I'm gonna go down to that 21.75 again. Okay, and I'm gonna go to a 1 delta there. And on my 1775, I'm going to increase that contract size. So now I'm looking at the same thing. I take about $1,000, generate some income on $570. Mid fill at 11.4. So I've got a 0.082 and a 0.114. Let's see if I get filled here. Taking up about $1,000 and extrinsic profit around 570. So that's not a bad return. That's like 50% on return on capital with a pretty high probability of profit. I'm going to take this trade. So I like this one here as well. Let's go. Try to get filled. So 113, 114. Try to get that filled. Replace 113. Perfect. All right. This one I'm going to take for other accounts. Now I'm going to get this one. This will be a campaign trade for me. So there. Filled. 732. Just double check the buying requirement. That's fine. Nah. I'll go 112. Filled. Filled. 7634. Okay, and then a couple more accounts. Check the IRA. this one takes up a little bit more buying power in the IRAs, but still only $1,900, still making about $500 or $600. That return on capital is still pretty strong. Then 8051 filled. Okay, good. All right, so I got some trades here on SI. Yes, this is a futures trade. This is a futures options trade. I typically don't love trading just futures contracts. I like trading futures options. It's easier to define the risk in general. Case in point would be if you trade the futures market and you saw what happened from Friday to Sunday's open, futures markets in the volatility expansion, it's insane. So if you had naked puts in the futures market or wide spreads, I mean, all these things were actually showing their bids were way past what it should have been. So the marks were way off. So futures is a little bit wild. That's why I try to stick to futures options instead of just the overall contracts. Okay, so let me get this added in here. This is an SI. This is an income play. So I'm doing the, let me go to this account here since I cloned it based on that as my master. So I have the 12/26 expiration, 21/75 sell put, and that 21/75 sell puts for 0.169. What was my credit for 0.128? Put for 0.128 credit, and then the 17.75 long put, 2 contracts, and that's a debit of 0.027. And that was a net credit of 0.082. Mechanics on the trade. This is 410 profit with 69K max profit, which that'd have to be like silver market goes to zero essentially, $1,000. So 1,070 buy power. And then I have the 1/28 expiration. Let's go to January. This one is the 21/75. 21.75 sell put for 0.170 credit. And the same strike on that long put, 17.75. 17.75 buy put for 0.033. If I clone this trade, net credit 0.113. That is a 565 profit and 69K max with around $1,100 in buying power. All right, so I'm just talking through that. I just have that all in my spreadsheet tracker. But we good. I mean, again, you like the trade, cool. I'm taking a futures contract on SI. I like silver better than gold as far as the technicals go. I think silver looks a lot more attractive for upside and just maintaining the symmetry. We still haven't hit it yet, by the way. So gold hit symmetry. That's why I was long on the call options. But this low to high swing, change the color. This low to high swing, this low to high swing. I'm still looking for silver to stay relatively elevated. So perform here and then hopefully back up into 35s. If that's the case, the trades I just took right now, that's going to make me around $1,100 by December. So not a bad little income play. And hopefully I can kind of, campaign those out for the next maybe 6 to 12 months and just keep taking some stabs on silver. Okay. One thing that is nice, I'll say this about, trading with Tasty. If you have an IRA, cash account, margin account, you can trade stocks, ETFs for free. They have 0 commissions on stocks and ETFs. You can trade options for I think they start out around like $1 a contract. They can, get down to like, I think my options contracts are as low as 60 cents, which is why I have an affiliate code for Tasty if anybody's interested in saving some commissions. 60 cents a contracts on options for entry only, not for exit. And then futures contracts. I mean, the fact you can trade futures, it's easy. I can trade crypto futures. I can trade ETF stocks, trade options like crazy. Just, and the fact I can do this for IRAs is even better. Not many brokers allow you to trade pretty much any asset you want, and just make sure you maintain your proper cash or your cash levels. There's no leverage on IRA accounts, right? But for a cash or margin account, I've got portfolio margin. All these things are pretty awesome. So, all right, that's gold, that's silver. Bitcoin trading at 59. I like this. It's longer term. I like it. I mean, Bitcoin might be the surprising alpha for 2024. If we hit all-time highs and make a run to 100K, I'm going to love it. My personal allocation of Bitcoin is around 10% of my portfolio. My client allocations are around 3%. I've got 3% silver, 3% gold, 3% Bitcoin right now. And, whatever upside we get, awesome. It's still risk capital. I acknowledge that. But anyway, I've got some trades on Bitcoin, some IBIT, some BITO. MicroStrategy is essentially trading Bitcoin now, which I put on those ratio spreads. And the premiums are very high in MicroStrategy. So I did the numbers. Michael Saylor and MicroStrategy, the combination, I think, have something like close to 400,000 Bitcoin at a cost of around 35K. They're sitting on like 20 bill or like close to $20 billion of Bitcoin right now in spot value. So MicroStrategy as a whole looks like crap from a fundamental standpoint, like the balance sheet, but having Bitcoin as like its treasury is ridiculous. And granted, I mean, they might never sell it. It might be nothing. But right now as a spot price, it's pretty impressive. All right, other trades, SPX, and I'll take some requests. I know I got a little bit more time here. So SPX, I should have had a full income trade this morning here. So that trade was centered. Oops, XPSX is what I need. There we go. There it is. So this trade's already, I took 405 in this morning. 405 this morning. Profit target hit at 345. That's a win. Sweet. So profit, and it's 1045. Profit hit trading at 2.25 by 10:45 a.m. Eastern time. Yay. Nice little win. Okay. We did gold. We did silver. We did Bitcoin. We can look at Mag 7. We can look at the indexes. A lot of times I kind of shift into currencies now. Everybody wants to know what the dollar is going to do. Here you go. My thoughts on the dollar, it's still a wedge pattern. Okay. I don't have a good clean decision on the dollar. Check Boeing. Yeah. I was actually doing a screener this week. I was looking at, let me see if I have a picture of it, or I saved it as a screener. Let me see here. ETF. Let me see. I saved it here. Here it is. So I ran a scanner this week. I was talking to Nick about this offline, but I ran a scanner this week on some potential commodity ETFs. And so I look, this is more like if we go into recession, then I'll probably have a portfolio that's dedicated to some of these. These are my top 5 right here. These are my top 5. So these are commodity-based ETFs. Some have a K1, some don't. They have different like wrappers on them, as it's just a basic ETF. But one thing that would perform better in a recession is probably going to be energy, commodities, possibly in the sector space, defensives, healthcare, maybe financials. Maybe. I would put financials at the lowest of the list, but I think energy, commodities is going to be the best non-correlated space to be in if we are going into a recession. Okay. So I did a scan. I mean, there's tons of ETFs out there. And so there's a little bit of digging that I've got to do. I don't feel like trading in, do I want to be in a wheat ETF? Not necessarily. Okay. What I want to be in is something that's, okay, I want an ETF that is in gas, oil, precious metals, maybe copper, maybe aluminum, maybe you can the industrials, right? So anyway, that's like a plan B. If we go into some garbage next year, then I talked about this morning in one of my earlier sessions. A SPY allocation with a TLT allocation with a GLD and silver. Okay, so SLV and GLD, and was there one other thing in here? And probably a mix of these. And I'll just put like energy / com for commodities. I don't think if we're in a recession, I would still tactically and actively manage this portfolio, but I would do something along these lines. Okay, underperforming, lots of cash in this space. But the question is, are we going to see the value play actually play out? We need to see non-correlated. So why would I maintain the SPY? It'd probably be SPY or DIA, actually, if we're going into recession. SPY because it's better premium. If I wanted to like own the SPY and actually lower my cost basis, week to week or every 30 to 60 days, I could easily do that in the SPY, probably more so than the DIA. Bonds, if there's a flight to safety, bonds are going to do well as rates continue to drop. Gold and silver, always nice to have in the portfolio. I love the technicals of silver. I think gold still has upside potential with rate cuts. So if you really want to simplify the portfolio, it doesn't have to be crazy complicated, right? All of these are ETFs. Like TLT is a bond ETF. SPY DIA ETFs on the indexes. Gold and silver, that's how you paper trade gold and silver. Energy, I mean, I could trade a stock. I could be an XOM, Chevron, or ExxonMobil. I could be an XLE for the energy sector. But I would probably want to have the exposure as simple as this. So this is going to be recession. And I'm not talking about this like we're going to have one, but I don't think that after what we saw this week, we can deny that it's not a possibility. It is very much a possibility that something breaks, the Fed missteps, the Fed. Look, the reality is maybe we're just slowing down, right? Maybe we have a contraction, maybe we have a slowdown, and the market can't be saved by AI anymore. The market can't be saved by the Mag 7, and it's a bit more of a reality check. I still think this is a good space to be. This is a good place to not sit in crazy drawdowns, but it's a way that I would still actively lower my costs and continue to, work through positions. Okay. I saw Boeing. Yeah, Ball Out says Boeing, BA. Still didn't say anything about. You literally typed that in the chat, right? Oh, I see what you're saying. I'm going 200 miles an hour. Yeah, it's right here, dude. I did talk about it. Come on. I spot checked it, and what do you want to do for an airplane maker that's in the worst possible media space? I'm only interested in Boeing at 120, and that price might never get hit. Right? I like it as you can't deny the price at $120, so I'll probably get some exposure there. But yeah, I mean, I'm not interested right now. I did some credit spreads early on. When we were up here, I had some credit spreads early on. When we fell, I put some credit spreads. I did okay. I had a couple, like I lost on one, and then I kind of made my way up with bigger contracts. So lost on a one contract trade, got in for two, made my money back. So I think I've got two winners to one loser. We're for some small profit on Boeing, but nothing crazy. I personally don't love this spot right here, because if it's sideways, like sure we can hold, but if we break and go lower, why not get more excited about this 120 spot? I think this company's in enough trouble right now that I mean, not in trouble, but like it just has bad press and nobody likes it. So I could see it being just beat up so badly that then it becomes like a bargain. And so if we hit, that's why my chart alarm is set. If we hit 120, I will start looking at some exposure. All right, there's ways to trade that. Okay, US downside over. Not necessarily. Okay. I mean, the yen crosses are pretty simple, right? We finally had this big flush. If there's more to come, I said it this whole week. Don't be crazy on the yen. Don't chase the yen. If you're trading it short term, would anybody be surprised to have a high to low that pulls back and then sells off? Probably not, right? The problem with that is if we go high, low, and we pull back into this like 38 zone or maybe the 50% zone, if we start to go lower, that means risk off trading, right? Because if we see a stronger yen on a currency strength chart, that means the Nikkei is probably down, the Japanese yen is strong. That as we just saw on Sunday and Monday, is going to drag in and weigh on the U.S. economy right now. Index wise and price wise, it'll weigh on the U.S. market. I don't think we can have like U.S. markets like totally on its own island, not affected by Japan. This carry trade is a 2+ year hedge that is unraveling. Okay, not hedge, more like leverage. This is 2+ years of leverage that is unraveled right in front of our very eyes. So I would not be surprised if the yen is high, low, lower, high. Maybe we come back in and test the lows, maybe go a little bit lower, and then we see if the BOJ is gonna, look, watch the Nikkei, right? If the Nikkei comes back and tests the lows, we're probably gonna see the dollar yen test the lows as well. I really think the correlation is that simple. If the Nikkei is up, Japanese yen is weaker. If the Nikkei is down, Japanese yen is stronger. So in the short term for Forex traders, there's going to be some volatility as yen crosses. Right? So I'm watching. We could still pull back in some of these levels. I mean, some of the other currency pairs fared way worse. Pound yen shedded over 2,000 pips or around 2,000 pips. Is that 3,000 pips? Yeah, it was 2,800 pips. That is ridiculous. Almost 2,800 pips on the pound yen. If you look at the technicals, this high, this low, if we pull back, this is a very common zone. 382, 50, 618. If we pull back into those zones right there, if the bulls are pushing this back up or there's profit taking and the shorts are gone, in this area, this is where I think the bears can resume some type of retest. Watch the Nikkei, watch the yen, watch the currency strength chart. Okay, that's my thoughts there. Pound dollar crosses in general, I don't have a decision. Pound dollar, I think, is garbage. I think it's a pretty confusing pattern right here. I see a broadening pattern that's a little bit trickier. So I'm staying out of the dollar crosses right now. I'm staying out of the pound, the euro. The trades that I took in, I'm on long dollar Swiss. That's it. So I'm long dollar Swiss. That's it. Dollar yen I'm out of. Dollar CAD I took profit. Aussie dollar I got stopped out. New Zealand dollar I'm waiting to see if we can retest. I'd love to see the New Zealand dollar. Oh man, it did bounce really nice. This was intermediate support that I talked about in my trade group. Looking to buy at like 58, 58.75 or 5800 or 58.90. I didn't take the trade because I thought if I took the trade here, I could either one stop out below or two hold the trade and then look for another entry all the way down towards 56. Right now it's still holding up like, okay, the dollar's getting slightly weaker, but here's what I do think on the New Zealand dollar. If we break above 62, I think this has a lot of upside. So there to there is a symmetry play. If we get a weaker dollar, and this is why I'm not convinced yet. If we just come up here and chop around, there's no trade. Okay. But if we break above 62, I like that trade to symmetry. I can measure it right now. I'm just going to box this in. And I do this all the time in my Forex trading. There's my swing. There's my projected symmetry. So if I'm a bull, okay, if I'm a bull on the New Zealand dollar, that right there is a pretty good profit target. I'm going to take this down just a smidge and right there make this green. And that right there is symmetry and a profit target if we get a breakout. So what's kind of nice about this is if we get a breakout above 62, I'm already projecting a move towards 68. So that's a big target for symmetry. And then you've got a round number like 7,000 as maybe a little bit of extra gravy on top of that. But to get that trade, either one, this has to push up and get that clear breakout, or even still, I still like this trade here. But if we come back down into the same lows and we can buy it off of this level, then I can buy it low enough, take it all the way here to the center high, and that's target one, and then double that move, and that's going to be target two. So longer term, give me 6 to 12 months. I'll find a good trade on this currency pair with open space, and hopefully we can make a lot of profit. But that's what I see. So pound dollar, I don't like the pound dollar right now. The dollar index is still in a wedge pattern. We need to get some confirmation one way or the other on the dollar. Market still kind of lingering around. We're at 531, 532 right now. Futures market is just indecisive today. We go into the weekend. We'll see what happens. So got to let the dust settle. I'll be watching this 5,400 next week. I did take a small loss of about $2,300 on my naked put for ES. And so I'm trying to get that $5,000 full profit to give me some net credit. But if I do take a $75 credit, So I make $37.50. I lost $2,300. I'll still make $14.50 on ES if I want to close it out now. But I'm going to let it sit in the weekend and see if I can have my time decay work a little bit more in my favor. Can you talk about what you usually look at for CC and stop loss? What is CC? CC or SL? Don't give me acronyms. Give me words. I see SL. I think stop loss. I see CC. I don't know what you're talking about. So type it in the chat. Okay. Any of the charts you want me to take a look at while I'm waiting for? Oh, covered call synthetic long. Okay. That would not have been my guess. Covered calls. Sure. So you talk if you're doing covered calls on own shares, I'll approach it this way. So covered calls. Okay, covered calls. If you own the shares, and one is you want the income. Okay, I'll put this. If you want to keep, if you want to keep the shares, then the best way to do that is probably doing like a 10 to 15 delta, a 10 to 15 delta covered call. Let me spell it correctly. A covered call at like 30 to 45 to 60-day cycles. So a 60 DTE cycles. And you're trying to generate the income. And with those lower deltas, like a 10 delta or a single digit delta, it depends on the stock or the index. You can still get some premium. You go out, 60 days, do a 10 delta, but the call side gets tested a lot, right? It may not close above the call side where the stock gets called away, but a 10 could get tested with a bigger move to the upside. This year, for example, 10 deltas were tested all the time in the SPY. 10 deltas were tested all the time in the Qs, just because we had more than expected moves to the upside. So if you want to keep the shares, you go out to the lower delta levels, try to keep your calls out of the way. And then if you want to keep the shares, you want to roll the calls. Okay. So if you go out 60 days and then you can roll, let's say like 21 DTE or less, look to roll, okay, out and up. So you roll out in time, you roll up in strike price if possible for a credit. I never like to roll for a debit, ever. I try never to. In fact, if I'm going to roll for a debit, I might as well get the stock called away and just start the campaign over again. Does that make sense? So that's if you want to keep the shares. Okay. If you are repairing a trade, which I do this a lot, if I'm willing to keep the shares and repair a trade, I'll show you a couple that I'm in right now. Then I'm looking at basically a calculate your break even. Right. And then, an at the money covered call to have the stock called away, or even I would even be willing to go slightly in the money, or an in the money covered call to have the stock called away greater than your break even price. Does that make sense? So on covered calls, if I want to keep the shares and I want to keep the thing running and keep generating income, lowering the cost basis, I want to go out to lower deltas, out in time, roll them, keep doing that. That does pretty well. That's if I want to keep the shares and, let's say it's the SPYs. If I own the SPY, own the Qs, own the DIA, own the IWM, I want to keep rolling those out there. If they're threatened, roll it. Always roll it for credit. For example, I've got trades right now in KWeb and FXI that, let me check these this week. So KWeb, let's go FXI. So I have the shares. I have it covered out to the end of this month at 26.50. We're trading at 25.36. So my cost basis right now is like $23.20. So if I get it called away, I'm going to make about $3 per share, $3.20 a share. It's a repair trade, as opposed to like I'm going to keep FXI forever. I'm not that interested. I'm interested in repairing, getting the buying power back. It's not a big expense. It's $2,300 as far as allocation. It's no big deal. KWeb, this one. So 26, this expires today. If I want to roll this, I can try to roll this now. I might go out for another week. I don't really want to necessarily, but check this out. I'm going to come back to, let me just use a different chart. KWeb. So we're trading at 26.33. Now, I could just do nothing, okay? But if I want to roll this out, there's probably a way I can make a little bit more profit out of this. Now, this is the balance of being greedy or just being smart. I'm not sure which is which right now on this particular trade, but I own the shares around $23.86. So if it gets called away at 26, I'm going to make $2.14 a profit. So what I might look at right now is I don't think I have KWeb for anybody else. I just have it on one account. Yep. So one account. And if I wanted to roll this, I'm going to try to get this client a little bit more profit. So let me see if I can do a roll really quickly. If I were to roll this out. So if I roll this out a week, okay, if I roll this out a week, I can grab another 24 cents, which makes another 24 bucks. It's not a big deal. If I get it called away, I make $214. If I get it called away by next week, I'll make $240. So what I don't want to do is be greedy, but could I also, this is what I could also do. I could roll it up by 50 cents, get a little bit more profit. Now I make $2.60, but I don't get any credit to roll it. Okay. So if I roll it by a week and I keep the same strike price on the call, I get 28 cents and maybe it gets called away next week. If I wanted to go out farther, and this is like the intricacies, right? Silver, I spent a lot of time on silver already this morning. Aussie Swiss, what you predicted. Is that a question or is that a statement? Because it is what I predicted, which would be the equal lows, right? We came back to that 2020 flash crash low on the Aussie. Yeah. So, by the way, I don't know if I'm going to get booted out of A1 or if there's no guest after me, but I'll wrap things up here in a couple minutes. Let me finish my thought here on the covered call. So, would I want to roll it next week for an extra 18 cents? Probably not. I think I'm just going to keep the buying power. It's the only client that has the shares right now. So I think I'm just going to let it get called away, repair it for 214, and that goes back to this point right here. So KWeb is this situation. I know the break even. I did the at the money call. I'm getting it called away. I'm repairing the trade. Whereas as opposed to losing on the credit spread, I flip what would be, let's say, a 50-cent loser into a $2.14 winner. That's pretty nice. So I like that, obviously. So anyway, but that's where I look at on the deltas if you're covering calls, and then synthetic longs. I typically do synthetic longs with a diagonal spread. So if we're speaking options here, and again, this isn't to like talk over anybody. If you know some options jargon, which is my least favorite thing about learning options, is just the stupid phrases and strategies they have. But a diagonal spread is that I buy the long-term call, and then I sell against it in shorter term increments. Right? So for example, if I buy a leap, right? So I buy a leap, which is a 360 DTE or more. And then against that, I'd maybe sell a 60 DTE call. And I'd probably do the same thing. I'd probably sell like a 20 delta or a 15 delta. And what that'll do is that will reduce the overall cost of my debit, right? Because it's essentially debit spread. You just have different expirations, but it's essentially like a bull call spread. But I reduce the overall size of my debit. And then if it doesn't get called away with that sell strike, I just do it again in another, like when that sell strike is either I've extracted a lot of the decay out of that and I can just close it and redeploy it, or I just let it go to expiration and I don't get the position called away, I'll just redeploy it. So if I go out 360 days, that gives me, 5 or 6 instances to then lower the cost basis, right? So that's what I do for like this synthetic longs is it's a bull call spread. I do a leap, I sell against it. I might sacrifice some gains, but when I'm chipping away the cost each time, that tends to help add to my bottom line. Okay. All right. Hope that answers your question, but those are good questions. All right. Market on the day, we're at 336 a little bit on the SPX. Okay, fine. Creeping up just a smidge on the morning. I didn't have any gamma levels that really stood out. The 530 is the big one on the SPY today. We have a low volume one that maybe drift up there towards 535, but that's doubtful. So anyway, do you work with anyone in the UK at all? I mean, I have followers in the UK. To what capacity? I mean, I've got traders all over the place. I work with a lot of traders in Asia, a lot of traders in Australia, New Zealand. I did have one trader that was in the UK. I was working with him with Device was the broker that I was using. That was for a FOREX service I was running. But yeah, I mean, there's traders all over the place. Okay, I'll let you go. Otherwise, I'm rambling. I'm going to start another session here in about 15, 20 minutes. So A1 trading, thanks for this week. I think we all needed to see things settle down. So from Monday to today, big wild developments in the markets. More to come. We got a lot of news next week to digest with inflation. You know how the market's going to react to it. Hopefully, we'll continue to see some good P&L and just continue to grind as usual. Pound dollar, Andre. I don't like the pound dollar at all. I don't like any dollar pairs right now until we have better confirmation. So, okay. Have a great Friday and a great weekend, everybody. See you soon. Thanks.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.